I get asked a lot in my daily live streams on AMC, how low will AMC go? When's the red going to stop? On this video, I'm going to cover that with you and tell you why I think that right now, technical analysis is completely useless for AMC. Let's talk about when is the red going to stop and what's going to happen next. Hey guys, Tony Denaro here. On my live streams every day, when we watch AMC, a common question that comes up is, how low do I think it's going to go? When are we going to see a reversal? And I see my fellow YouTubers trying to do their best to make you feel better with some bullish reversal charts and analysis, but really that's not going to be helpful at this point. So let's talk about what's going on, where this is going to go, and what actually will be helpful. Let's start off by comparing these two charts that I have up on the screen, the top one being AMC and the bottom one being the NASDAQ. You can see that since the 17th of September, these charts are almost exactly the same in where the ups and downs happen and the degree to which they happen on a minute-by-minute basis. Because of the compression of the prices on the right-hand side of the graph, it's hard to tell the percentage drops, and I'll cover that in a second. But I do want you to notice that for the most part, every single downtrend in the NASDAQ and the trends back up are completely mirrored in AMC. What we have here in the NASDAQ since the 17th of September is a fall of about 5%. Actually, it's 4.85%. AMC, on the other hand, even though the charts appear exactly the same, is down about 22.9%. And here in this second example, we have the S&P 500 on the bottom with AMC on the top. Since the 17th of September, you'll notice that when the S&P is going down, AMC is going down. When the S&P is going up, AMC is going up. Over this time period, again, AMC is down about 23%, while the S&P was only down 1.5%. The takeaway from these two examples is not to focus on the percentages. We will talk about that in a second. But just to recognize that what is happening with AMC, when AMC goes up, when it goes down, is the exact same thing that is happening on the major indexes, just to a larger degree for AMC. So what I want you to do is take a step back and just feel comfortable with the fact that what is happening right now with AMC has nothing to do with AMC. We have the Fed spending limit and the debt ceiling issue creating doubt and uncertainty in the market. We have the 10-year Treasury yields going up. And all of this is meaning money is coming off the table in equities. Big institutions are lowering their risk to a bigger market sell-off. Less buyers and more sellers mean downward pressure for any stock. And stocks with a high beta like AMC are going to experience a sell-off to a larger degree than the major indexes. Now, I know you've been told over and over on other YouTube sites and Reddit that AMC has a negative beta, and you're probably wondering, why is this stock not skyrocketing up like you were promised as the market goes down? I did cover this on a video a few days ago about negative beta and why AMC actually does not have a negative beta, and I walk you through that. Go back and watch that video if you haven't already, and you'll get a better understanding of why AMC actually has beta far greater than 1, and it will make exact sense to you why we're falling at a faster rate than the market, even though the pattern exactly follows the market. It all has to do with volatility. Just like technology stocks, AMC has a high beta, and it's going to experience more dramatic swings both to the downside, and when things turn around, it's going to experience higher swings to the upside. Now, when I say when things turn around, what does that mean? The uncertainty is going to need to be taken out of the market. Congress is going to need to resolve these issues for investors to feel confident to start putting money back into equities. We have a deadline of Thursday midnight for the federal spending limit and October 18th for the debt ceiling issue. Now, it's my hope that Congress resolves both of these in one fell swoop, but there's no guarantee that will happen. This issue that we're seeing in the markets could theoretically extend all the way through to October 18th. For the more pressing issue of the government running out of money by Thursday at midnight, the last time that happened was December 2018, and that lasted for 30 days. Let's take a look at what actually happened to the stock market during that time for a little glimpse of what might happen to the market and to AMC in the coming days. This chart that I have up on the screen shows the S&P 500 in late 2018 going into early 2019. And if we start at this bar and follow the trend down, about December 20th, right here where the mouse pointer is when the government went into a shutdown. Now, it is worth pointing out that during this time running up into the government shutdown, the stock market, the S&P, actually declined 15%. The interesting thing to note is that the government shutdown wasn't over until late in January, and the turnaround actually started in the middle of the government shutdown, and the market rose back up another 12% from that low in the middle of the shutdown. Ideally, we do not want to see a government shutdown and this type of market decline, and we certainly don't want to see the debt issue not get resolved, resulting in a default. But it is worth just kind of refreshing our memory that even if there is a government shutdown, things can turn around right in the middle of it. So just to wrap up, why am I not doing Fibonacci retracements? Why am I not drawing support lines and falling wedge patterns and all of the things that everybody else is doing? Because none of that is relevant when the market is in control. AMC is going to follow the market where it goes for the coming days and weeks. And I can sit here and draw support lines and Fibonacci's and any other sort of technical analysis. It's simply not going to be useful in predicting what's happening to AMC because AMC is not in charge right now. Just being perfectly blunt, if the market has a severe correction, it would not surprise me to see AMC go into the $20 range very easily. $25, $22, $27. I'm not sure how low it would go. What I do think that is at some point there will be support from the ape community come in and say, that's low enough. I've been waiting for a buying opportunity like that. I know I have money on the sideline just waiting for another opportunity to go in and buy at a lower price point than we're at right now. On the good news side, whenever the market does decide that the congressional issues, the federal debt issues, the debt ceiling issues are all out of the way and people feel comfortable putting money back in the market again, I feel confident that AMC is going to turn around and move up at a rate faster than the indexes that we've been so closely mirroring for the past couple of weeks. The final bit of good news that I want to leave you with is the memory, the perspective that from the beginning of August to mid-September, AMC ran up 80% in 5 weeks. 80%. That is easily doable again, but not in the conditions where the market has risk being put onto it and the market as a whole is being taken down. Now, if you're looking for the ape community where you get some doses of real talk along with support from other investors who are long and bullish on AMC and GameStop, I invite you to check out the live stream that I do every day during market hours. Buy and hold that subscribe button and hit the alert notification so that you don't miss an upcoming video. I'm Tony Denaro. I want to thank you for watching, and I will see you on the next video.